Hello, my name's Brian Dale. I'm an insurance agent at Commercial Insurance Associates. I want to say thank you to the Northwest Georgia Transportation Club for having me. I want to give you guys an update on the status of the trucking insurance marketplace. We're going to dive right in here and keep this video to about 15 minutes or so, as to not lose everyone in insurance and have everyone fall asleep. So you can look at this chart real fast and know it doesn't look good. Since 2011, the insurance, commercial auto sector of the insurance industry has performed poorly, and this encompasses trucking insurance. Also important to note that is a 2-year statute of limitations in most cases for auto liability claims, and these numbers are subject to get worse. It can also take several years to fully develop, litigate, and settle. So what's being done and why are trucking insurance rates increasing? Let's go there first. Underpricing in previous years. I think we hit some record lows in insurance pricing after the crash of the housing market all through 2009, 10, and 11. If you guys were in trucking and paid trucking insurance premiums, you probably know they were very cheap. Unfortunately, that resulted in, well, in my opinion, I think it resulted in this steady climb that we're having now. However, there are a lot of other factors, but that is one. Corrupt personal injury legal system, social inflation. What we're talking about here is plaintiffs' attorneys getting new precedents set all around the country, but also social inflation refers to it's kind of like the practice of attorneys in cahoots with medical providers and creating surgeries when they're not needed and things like that. That is being discovered more and more by insurance companies and other associations. So not a good thing. Increase in nuclear verdicts. Nuclear verdict is a settlement or a jury award over $10 million. Those are becoming more common. Limit losses are when a claim hits the insurance policy limit, normally about $1 million, maybe more. They're just becoming more and more frequent. Increased healthcare costs. I think a $10,000 study showed that a $10,000 claim like 4 years ago is a $50,000 claim now. So our medical costs are much higher and they're on the rise. Reptile theory, you can do a Google search on that. I'm not going to go into that too much, but this is another thing to do with plaintiffs' attorneys getting in the minds of insurers and just making trucking companies look bad over what could be some minor infractions and things like that. And then litigation financing is just a disaster. That these guys are, claimants get in touch with billboard attorneys. Next thing you know, there's a company there wanting to finance the future settlement and pay for all the expenses at a ridiculous interest rate. And so it makes the potentially, I'm not saying all claims are not deserved or shouldn't be awarded and things like that, but it makes your claimant a little more hungry for a lot more money because those interest rates are ridiculously high. So it doesn't do anything good for the claim. So what are insurance companies doing to combat these losses? They are looking at data points as much as they can. They're getting their fingers on as much data as they possibly can to make sure that they're pricing for the risk for their exposure. Some programs want to access your ELDs and camera systems, for example. They want to get in there and see how the driver's driving and understand his habits and his or her habits and things like that. We all know they're looking at CSA scores like a hawk. They can see the data. They can tell if the vehicles are being maintained. They can tell what kind of violations you're getting, whether they're ELD or speeding on logs or over hours, et cetera, et cetera. They can see it all. Track the VIN numbers on the trucks, the trailers, the drivers. They know where you're getting inspected. They know where you're running, et cetera, et cetera. So they're looking at all the data they possibly can. Capturing truck exposures basically refers to the same thing. They're checking all the VIN numbers that have been inspected in the last year. They're comparing them to your insurance application. They're not letting people take trucks off their policy if they're just up for sale and things like that. Because I mean, if somebody test drives one of your vehicles and has an accident, they're on the hook even if the truck's not on the policy. So They're examining credit scores a lot more than they used to, and including the owners in some cases and their insurance score. They're also underwriting the company financials a lot harder. Instead of just checking for profit and loss and equity, they're looking to actually see where the revenue's coming from, how it's being spent, and checking the trends over time, things like that. That gets us into how can you combat rising insurance costs. And I'm going to say number one, first and foremost, I hope every truck has a dash cam in it. I really, really, really do. And I know some people, some company owners are against that, or they're worried their driver might expose their fault or whatever. But we all know that statistically speaking, like 85 to 90% of the accidents are not caused by the semi truck. And I'm not talking about inward facing dash cams. I'm talking about outward facing. I'm talking about the ones that can catch lane changes to eliminate the he said, she said accidents. Because let's face it, by law, we have the deep insurance pockets, and it ends up coming out of ours when somebody gets hurt and they can't tell whose fault it was. And it's very unfortunate. So dash cam can help with that. I want to say documented orientation, safety meetings, and remedial training is extremely important here. And it used to be that the only way to do that was to have drivers come in the office, have them watch video, give them all, and that's a big deal. I know everybody's busy and we have businesses to run and things, but they have online training platforms now. You can send your driver a login. He can do this stuff at home or on the road, before he starts to work or whatever, and you can have it documented that he went through your company's orientation. You can have the video set up for safety meetings. For example, let's say winter's coming and you want to talk about icy road conditions and things like that. You can set those up online and all of your drivers can log in, check it out, pass the quiz, and it's documented that they received their safety meeting. Also, remedial training. And remedial training kind of runs into the next thing I'm going to talk about, and that's creating and following your own policies and procedures. So when you create policies and procedures, I think a lot of your small and medium trucking companies really just use something that somebody gave them and they don't really follow them. And I think that is a recipe for disaster if there's ever a large claim, because a lot of your very large verdicts are coming from companies that are not following their policies and procedures. And so what I mean by that, well, there's a lot that can go into it, but one example is driver hiring criteria. And what does it take for, what's the limit of number of transgressions that a driver creates before they have to be terminated? So, insurance company provides driver guidelines, but those are minimum requirements. So it's worth it to sit down and say, what are my hiring criteria? What kind of driver do I want in my truck? And create that, and then determine, what are the maximum numbers of violations that we're going to allow for a driver to continue working here. And that goes back to the video training with the remedial training. You can, with these online platforms they have now, you can provide a driver with remedial training as part of your policies and procedures. So another very important thing is when you're hiring drivers, I think everybody's pretty much looking at PSP reports now. I can tell a lot about, what a driver's been up to the last couple of years. And creating a professional safety culture is a beautiful thing, but we could spend a long time talking about it. And I hope everybody has a way of making their drivers feel a part of a team, and doing some things like that. So I think I covered that a little bit more in one of my previous webinars. If anybody wants a link to that, I can grab it. So what are some of the pricing factors? I wanted to share this with you to just kind of help understand. I know a lot of companies pay on a spectrum. They pay a whole lot of money for insurance, and then they have a friend in the business who pays a very little amount of money for insurance, and we get that question sometimes. So I wanted to, this is integrated with the losses, and this is what insurance companies are doing now to try to control their exposure. So these are just some of the things that an insurance underwriter looks at when they see an application for insurance. So they're going to want to know, does the company have all asset-owned equipment? Are they hiring owner-operators? hiring owner operators is not necessarily a bad thing, but are those owner operators subject to the same scrutiny as asset controlled vehicles? So I know you're not supposed to control your owner operator, so to speak, but at the same time, they should have to go through the same type of fleet maintenance program, and that all of your driver criteria and guidelines apply to them just like they would a company driver. So they're checking to see if you're running brokered loads, and if you are, are you going to the same places, or are you just kind of taking whatever pays the most and go wherever it goes? Because that matters what jurisdiction you're entering into. So if they see that you're going into some of the problematic jurisdictions, odds are they're going to price higher for that. Your contracted fleets and dedicated lanes and dedicated routes or shippers can be a big price break. They kind of know that you're going into controlled areas. Drivers are familiar with their routes, and it's common sense that that's going to be a little more controllable from an exposure standpoint. But they're obviously looking at your CSA scores, and we've done a previous webinar about that. Again, if anybody wants the link to that, we'd be glad to give to them. Length of time in business obviously is going to matter. I'm going to say it's really hard these days to start a trucking company and grow it. You can have a new truck, a new startup, a new venture, so to speak, a new trucking company with one truck can be anywhere from $5,000 a year to $100,000 a year. And I know that sounds crazy, but if the owner is an owner operator or was an owner operator and he just got his authority and his credit is good, his insurance score is good, and obviously his driving record is clean, and he knows what he's going to be hauling and where he's going to be going, it can be very, very inexpensive to start a trucking company. But on the other hand, if you're hiring owner operators and they're running brokered freight and you start growing that company, the number of insurance companies that'll even offer a quote is very small. There's only a few. So that's when with bad credit and some other things, that's when the price really starts racking up there. It's not impossible to start a trucking company these days, but they are making it difficult, and that's because based on the data, that's where a lot of the claims have come from. So your radius affects your pricing, your claims history, obviously, your financials, whether the insurance company gets them from Dun & Bradstreet or they request them directly from you, or they might do both. Or a smaller fleet can be personal financial, meaning credit report, insurance score, etc. And obviously your drivers. The quality of your driver roster pool, the MVR quality, and the amount of driver turnover every year is a big factor of your insurance pricing. So how can we work together and try to help control or how to help combat rising insurance prices? Is I think we have to obviously get the claims under control. In order to get the claims under control, we have to do something about the laws. Well, the laws are different in each state. So this is really a grassroots movement, and it requires everyone's voice being heard. So we can contact our elected officials, and I think I saw, if you just Google that, there's a place that lists how to get in touch with all of them from the top all the way down to your mayor. I think it was usa.gov. I just looked at it a few minutes ago. So check that out. But through our associations, like the Georgia Motor Truck Association, like even through the Northwest Georgia Transportation Club, which has a voice with neighboring associations, we can work together to do some things like lobbying for restrictions on attorney ads, caps on specific damages, transparency of financing of future settlements, working with the state associations to bring public awareness to the movements and to the bills addressing these things, and promoting business-friendly judges in unfavorable jurisdictions. I think that that's something that we should hear, or we should let our elected officials hear about from us. I think it's something that we should also support our associations so that they can do that as well. So I invite any questions. I appreciate everyone taking the time to listen to the update today. I think we're still facing a challenge here. I can see it leveling off maybe pretty soon. It seems like insurance companies have been able to combat the rise. Unfortunately, it's hitting everybody in the pocketbook. And it's hitting everybody a little bit differently. So I hope we were able to provide some insight on what insurance company underwriters look at, and I wish everybody the best in controlling your insurance costs and by controlling their insurance exposures. Thanks again to the Northwest Georgia Transportation Club for having me today. My contact information is up on the screen there. If anybody has any questions, please feel free to reach out. Thanks again, and have a great day.